Okay, today we see exercise number 11. You see there Sri Vijay, who keeps his books under single entry system. Mr. Vijay keeps his books under single entry system, gives you the following information. First, he has given the opening statement of his balance sheet as on 1/1/1988. Balance sheet is given, and secondly, cash book for the year 1988 is given. Okay, two statements are given, and you have to check whether they are the statements or the real uh, state of affairs. The first is opening statement of where or only a statement of asset and liability. You have to check. And secondly, you have to see the cash book, whether that is a cash book or only a statement of receipt and payment. Then only you go for the preparation. Okay. The first is the balance sheet. Heading itself they given as balance sheet as 1/1/1988 means opening balance sheet. Opening balance sheet means opening statement of affairs. Okay. And the total is 25,000 and capital is given in the statement of affairs. Therefore, everything is completed regarding the opening statement of affairs. And second is cash book. In the cash book, there is a balance brought down. Balance brought down means opening balance is there, and at the end, closing balance is there. Therefore, it is a cash book. It is confirmed. It is confirmed that it is a cash book. Okay. Then in the third part, other information is given. On the basis of this, you have to prepare the required accounts to ascertain the missing information. First requirement is statement of affair, that is already given in the problem. And second requirement is your cash book, that is also provided. Then third requirement is information related with the debtors, and next is information related with creditors. Therefore, you requires debtors information and creditors information. Okay, this is the requirement. Then we will see where the items comes first, then prepare the debtors required account and creditors required accounts. Okay, you see here this is the problem. Then you have to start from the first statement of his. You have to start from the first statement of his. Capital goes to balance sheet, opening capital. Creditors goes to opening balance in the creditors account. Bills payable goes to bills payable account, opening balance. And asset side machinery goes to balance sheet. Bills receivable goes to bills receivable account, opening balance. Debtors goes to debtors account, opening balance. Debtors goes to debtors account, opening balance. Okay. Next, stock goes to trading account, opening stock. Okay. Then bank goes to cash book. It is already taken in the cash book. By balance brought down. Balance brought down. Bank balance. Okay. So sorry. What is the problem? I told that cash book is given. Okay. In the discussion, now the problem arises. What is the problem? Bank account. Bank account 4,000 balance. Bank account 4,000 balance must be recorded in the cash book as opening balance. Opening balance. But it is not in the cash book. Therefore, you have to prepare bank account. Then whatever given the second statement, this second statement is only cash account. It is only cash account. Therefore, it is necessary to open bank account. Okay. This point I come to know only when I started the discussion. Okay, before that I was not having any knowledge regarding this. So one more account you have to prepare, bank account, because bank account balance is not taken in the cash book. So this cash book is not a cash book of cash and bank. It is only purely related with cash. Okay. Therefore, we'll open the bank account and take the balance to the bank account. I'll open the bank account. Okay. Then next is cash. Cash goes to cash book. Cash goes to cash book. 1,000 is the opening balance. This 1,000 is taken in the cash book as balance brought down. Clear? In this way, you have to take the opening balance is to the opening account or to the balance sheet next. Clear? Then come to the cash book. Opening balance goes to opening statement office. Cash withdrawn from the bank. Cash withdrawn from the bank, you take in the bank account credit side as buy cash. Make contra entry. Make contra entry. Here is bank. In the bank account, you write buy cash. Then capital 1/7/1988. This is the additional capital to be added in the opening capital in the balance sheet. Okay, you add this capital as additional capital in the balance sheet. The next is debtors. Debtors goes to debtors account by cash. Debtors account by cash, credit side. Then cash sales is there. Cash sales goes to cash book. Sorry. This cash sale goes to trading account credit side by sales. Then bills receivable is there here. This goes to bills receivable account credit side by cash. Means cash collected on bills receivable. Then miscellaneous income is here. This miscellaneous income goes to P&L account credit side. P&L account credit side. Now come to credit side of the cash flow. Creditors goes to creditors account by to cash. Cash collected from creditor. Machinery is there. This machinery means purchase. Payment for machinery means purchase. If it is on the receipt side, that is called as sale of machinery. So it is the purchase of machinery. You add to the machinery in the balance sheet. In the balance sheet, you take the opening machinery 7,000. This 7,000 you take in the balance sheet, opening balance, and add purchases during the year. Machinery addition during the year 600. So 7,600 is the total. In that total, you deduct the depreciation, if any. Then bills payable goes to bills payable account, debit side to cash. Okay. Then drawing goes to balance sheet, liability side, less item in the capital. Deposit in a bank. Deposit in a bank is a contra entry. Deposit in a bank is a contra entry. In the bank account, you write to cash. In the cash book, bank is there. Then in the bank account, you write to cash 3,000. Okay. Then next is freight and carriage. Freight and carriage is trading account, debit side expense. Wages and salary. Wages and salary is a trading account item. I'll remember, my dear friends, remember wages and salary is a trading account item. And salary and wages is P&L account item. Remember this point. Okay. If wages is first, trading account, salary is first, P&L account. P&L account. Rent rate goes to P&L account, debit side. Office expense goes to P&L account, debit side. Closing cash balance goes to balance sheet. Okay, in this way you take the balance sheets. And next goes to other information. In the other information, closing balances are given. Okay. The first is debtors. Closing debtors goes to debtors account by balance carried down. Creditors closing balance is there. It goes to creditors account to balance carried down. Stock goes to trading account by closing stock and next balance sheet. It goes to balance sheet asset side. Bills receivable closing balance goes to bills receivable account debit side to balance carried down. Then bills payable goes to bills payable account debit side to balance carried down. Okay. Bills payable to balance carried down. Bills receivable by balance carried down. This is the point you remember. Then next point, credit sale goes to creditors account credit side. Credit sale goes to creditors account credit side by credit sale. Credit purchase. Credit purchase goes to creditors account credit side by credit purchase. Clear? Then credit sale goes to creditors account credit sale goes to debtors account. Credit sale goes to debtors account debit side to credit sale. And then you have to take the same to the trading account, credit sale and credit purchase trading account. Okay. Next, interest allowed on capital at 5%. This interest is to be calculated on the opening capital first. Remember this point. You calculate opening capital for 1 year. On opening capital, you calculate 5% for 1 year. And if there is an additional capital, on the additional capital, you have to calculate 5% for the period of additional capital invested. From the date of investment to the date of year end, you have to count the months. On the basis of that period, you calculate interest on the additional capital. I think you have calculated this in your PUC second year partnership accounts. So many problems you have solved in your partnership accounts in PUC second year, and you know it. And if you forget it, you see I calculate in the problem. Okay, interest on capital is to be calculated on the opening capital full 1 year. Additional capital for the period of investment made. Clear? And this total interest you have to take in the P&L account debit side first. P&L account debit side first, and it is added to the opening capital in the balance sheet. This is the point, remember. Two adjustments. Then next come to the depreciation. Depreciate machinery by 10%. Depreciate machinery by 10% comes to P&L account first and deduct in the machinery account. And regarding this machinery also, you have to calculate full year depreciation on the opening balance. And if there is an addition of machinery or asset, you have to calculate depreciation based on period. Okay. This is also, I think you calculated in your PVC second year class depreciation chapter. Okay. Clear? This is the explanation. Now I will go to solve the problem. First, debtors account, then bills receivable account. Two accounts I will prepare. Okay. In the debtors account, first I'll take the opening balance. To balance brought down 6,000 is there. Okay, balance opening statement of phase. You see the opening statement of phase first. You take balances from the opening statement of phase, then go to cash book, then go to other information. 3 steps. First step, statement of phase, you complete. Second, cash book complete. Third, other information. Stepwise, you take the information. From the statement of phase, first you take the to balance brought down. Then in the by balance brought down, I'll write, and balance I'll take afterwards. Next, the balance is Given at the last, that is 8,000. Buy balance carried down, 8,000 is there. Then in the bills receivable account, two balance brought down from this opening statement of is 2,000 rupee. Then buy balance carried down is given at the last in the adjustment. That is 3,000. Okay, like this you take the balance. After taking the balance, you go to cash book debit side. Cash book debit side, there are two items. One is debtors. Two debtors will be buy cash in the debtors account. Buy cash in debtors account, amount is 12,000. Next is bills receivable. In the cash book debit side, bills receivable. In the bills receivable, buy cash 2,500. Okay, this is the information in the cash book. Next, come to the third part. Debtors balance, closing balances are there. Credit purchase is given and credit sale is given. So you have to take credit per sale in the debtors account. To credit sale. Credit sale is rupees 17,500. You take the 17,500 credit sale. Then allow interest on capital, depreciation are there, goes to P&L account. Problem is completed. This is the information related with the debtors account. Here, I prepare the bank account. One more account, I will prepare the bank account to ascertain the balance. Okay. Otherwise, you calculate the bank balance simply on the basis of opening balance plus deposit minus withdrawn is the balance. That is simple thing. In general way, it can think. You see the problem in the statement of phase. In the statement of phase, bank balance is 4,000. Okay. 4,000 is the bank balance. Then cash withdrawn from the bank is 1,000. If you withdraw the cash from the bank, balance will decrease. 4,000 minus 1,000 drawn. Remaining balance is 3,000. Then you see the credit side of the cash book. Cash deposited in bank. The cash deposited in bank is 3,000. Okay, you add that, automatically your balance is 6,000. In this way, you can calculate orally also. You can calculate orally also, but I'll show the account for your reference purpose. First, I'll close the two accounts. The total of the bills receivable account is 5,500. Difference is 3,500 goes to debtors account. Okay. In the debtors account, buy bills receivable 3,500. 3,500. Clear? Then close the debtors account. That is 23,500. 23,500. Debtors account tally. Okay. No problem. Now you prepare the bank account. In the bank account, two balance brought down. From the statement of phase, 4,000. Then go to cash book. Cash book debit side, withdrawn is there. That comes on the credit side. And deposit comes on the debit side. To cash, 3,000. Cash deposited. It is on the credit side of the cash book. Contra in the debit side. And debit side item comes on the credit side as buy cash, 1,000. Okay. These are the only three items regarding the bank. So total is 7,000. 7,000 is total. Buy balance carried down 6,000. You can prepare the account and ascertain the balance. Otherwise, orally you calculate. How to calculate? Opening balance in the bank is 4,000. Withdrawn 1,000. Balance remained 3,000. Then again deposit 3,000. So balance bank in the bank is 6,000. It is a simple way. Clear? Then I'll go to next slide. That is creditors and bills payable account. This is the creditors and bills payable account. In the creditors and bills payable also, first I'll take the opening balances. Opening balance from the opening statement of affairs. In the opening statement of affairs, creditor is 2,000. Creditor is 2,000 and bills payable is 1,000. Okay, bills payable is 1,000. I write the closing balance as it is, and otherwise you can see the last paragraph and take the balance. Okay, then after I'll entry. Next goes to cash book. In the cash book, payment side, payment to creditors 10,000, bills payable 1,000. So in the bills payable account, buy cash 1,000. Okay. In the cash book, this is buy bills payable. And in the cash book, creditors is 10,000. Buy creditor 10,000. In this account, it will become to cash 10,000. Clear? Cash book item completed. Cash book item completed, then go to other information. In the other information, credit sale is there. Credit sale comes on the credit purchase. Credit purchase you take on the credit side. Buy credit purchase 14,000. Okay, this is the only item. Now you close the account and ascertain the balance or missing information. So first I will close the, sorry, I will take the closing balance. Closing balance is only entered. I have not taken the closing balance. From the third paragraph, creditors is 8,000. Sorry, creditors is 4,000 and bills payable is 2,000. Closing balance we enter from the last paragraph. Now you close the account. First bills payable. Remember this. You close the bills payable total is 3,000 debit side. Then difference is 2,000. This difference you take to the creditor account. Okay, main important item on the credit side of BP is creditors, and take to the creditors account as 2 bills payable. Okay, in this way you take the amount. This 2,000 difference is called as creditor important item. Then go to creditors account, 2 bills payable 2,000. Okay, now you close the creditors account. Creditors account total is 16,000 debit side. Total debit side 16,000, credit side also 16,000. Creditors account tallied. Then there is no problem. So creditors account completed, debtors account completed. Now I'll go to trading account. In the trading account, trading profit and loss account, first item is opening stock. First item is opening stock. You take the opening stock from the opening statement of affairs, 5,000. Then next is purchases. Cash purchase from the cash book, credit purchase from the creditor account. There is only credit purchase. Cash book, there is no purchase. Therefore, 14,000 is the only purchase. The next item is from the cash book. You see the cash book, and if there is any item related with trading account expense, okay, in the cash book there is a freight and carriage and wages and salary. So first I'll take wages and salary rupees 3,000. Next is freight and carriage. Freight and carriage is 500 rupees. Okay, these are the only items related with the debit side. Come to credit side, first sale. Regarding first sales, you have to take cash sale from cash book. Cash sale from cash book, credit sale from creditor account. Cash sale from cash book, in the cash book sale is 2,000. And in the debtors account, credit sale from the debtors account. Debtors account 17,500. So total it is 19,500. Next you take the closing stock from the account balance. Closing stock from the account balance in the third page. Closing stock is 5,000 in the adjustment. Okay. Now you close the account and ascertain the gross profit. The total is 24,500, 24,500, and difference is gross profit rupees 2,000. Gross profit is rupees 2,000. Okay. Gross profit 2,000 rupees. Then you take the gross profit to the next part. By gross profit 2,000. By gross profit 2,000. Then you take the information from the accounts. First, cash book credit side. Cash book credit side items are, first is rent and rates, office expense. First is rent, 200 is there. Next, office expense, 700 rupees there. Okay. In the debtors account, there is no other item. There is no other item in the debtors account and also in the creditors account. Okay. In the cash book, miscellaneous income is there. You have to take the miscellaneous income. Miscellaneous income is 400 in the cash book. Cash book items completed. Okay. And come to the adjustment. In the adjustment, first adjustment is interest on capital. To interest on capital. Interest on capital is to be calculated on the opening capital. Opening capital is 22,000 in the statement of affairs. Opening statement of affairs. On 22,500, you make 5%. It is 1,100. Clear. Then additional capital is there in the cash book. Additional capital in the cash book is rupees 3,000. Okay, 3,000 is there. On the 3,000, you have to make 5%, but taking into consideration of period. Period is 1/7/1988. 1/7/1988 is there. Therefore, from 1/7/1988 to the end of the year, how many months? 7, 8, 9, 10, 11, 12. That means 6 months. Okay. 6 months interest you have to calculate. So 3,000 into 5 divided by 100 into 6 by 12 is equal to 75. Okay, 75. Total interest on capital is rupees 1,175. In this way, you have to calculate interest on capital. Okay. Next is depreciation. Depreciation on machinery. Opening balance of machinery is 7,000. On that, you calculate 10%. It is 700. And in the cash book, purchase of machinery is there on 110 rupees 600. On 600, 10% is 60 rupees. But that is not used for full year. It is purchased on 110. 110 means October. October, November, December. Only 3 months. Only 3 months that asset used. Therefore, you have to calculate depreciation for only 3 months, not for the full year. Additional asset. Therefore, opening a balance of asset 7,000 on that 10%. 10%. And on remaining addition 600 into 10 by 100 into 3 by 12. In this way, calculate. Its answer is 715. Okay, 715. And problem completed. I gone through serially from the first point to last point. Problem last point reached. I reached the last point of the problem. Now I will close the account. So I think it is debit side is more. Credit side only 2,400. Debit side 900 plus 200, 1,700 to 2,000, 2,700. More than 2,700 is there. So I'll take the total of the debit side. 2,790 is the total. 2,790 is the total. Difference is 390. This is net loss. By net loss. This is to be deducted in the capital. In the capital. Okay. So remember this. Now I'll prepare the balance sheet. In the balance sheet, Sri Vijay, 1988, December 1988. First is capital. Opening capital is 22,000. Opening capital 22,000. Then you have to add two items. One is interest on capital. Another is additional capital. Additional capital is 3,000. Interest on capital is 1,175. Third addition is net profit. Net profit is not in this problem. Okay. So you add this. Total is 26,175. Then you have to deduct three items. One is data drawing. Second is interest on drawing. Third is net loss. Out of these, there are two. One is drawing, another is net loss. You see in the cash book, is there drawing or not? In the cash book, drawing is 1,000. Drawing is 1,000 in the cash book. Okay. That 1,000 drawing is to be deducted. Drawing 1,000, then net loss is 390. Total is 1,390 you have to deduct. You deduct 1,390. Remaining the balance is closing balance 24,785. Okay, this is the capital adjustment. Then go to the account balances. You take the creditors account balance. Creditors account balance is 4,000 creditors. Then bills payable. Bills payable account 2,000. Bills payable 2,000. These are the items coming on the liability side. And go to asset side. Asset side first is debtors. You take the debtors closing balance 8,000. There is no adjustment. Only adjustment is RDD. Then you take the bills receivable account. Closing balance is 3,000. Next you take the cash. Cash closing balance is 1,900. Then you take the bank account balance. Bank account balance is 6,000. These are the accounts you prepared. From the account balance, from the account you take the balance. Okay. Creditor balance from the creditor account. Bills payable balance from the bills payable account. Debtors balance from the debtors account. Bills receivable balance from the bills receivable. Cash from the cash account. Bank from the bank account, if the accounts are there. These are the closing balances. These are the closing balances. Okay. Next, you take the closing stock. This closing stock from the trading account, 5,000 rupee. Okay, 5,000. Next, you take the machinery. Machinery opening balance is 7,000. You see the adjustment very carefully. Okay. In single entry system of bookkeeping, from one problem to another problem, there is a little bit difference. Little bit difference. Machinery opening balance is 7,000. And addition in the cash book, payment side. Addition in the cash book payment side, purchase of machinery, 600. Okay, opening balance 7,000, add purchase 600, total 7,600. Then from this you have to deduct the depreciation. Less depreciation 715. This is from the P&L account. Okay, in the P&L account you calculate it separately. Okay, total depreciation you deduct. Deduct the remaining balance is 6,885. 6,885 is called as balance of machinery. Okay. Now lastly you take the total. Total is 30,750. 30,750. In this way you have to solve this problem. In this problem, main important things are, One is interest on capital. Remember this point. Interest on capital is there. Additional capital is there. Addition to machinery is there. Then how to calculate interest on capital on opening and additional, and how to calculate depreciation on opening balance of asset and addition to asset. These are the main important points covered in this problem. Okay. Thank you. We'll see next problem in the next class.